Good morning, everyone. Um, Indeed, an honor to have all of you and be, moderating a panel of such an eminent panelist. We were just having some discussions outside and how the role of CFOs have been evolving over the last, let's say, 10 years is very different from how the role of a CFO evolved in the 10 years before. That makes the CFO's role even more exciting. And if you look at the topic of which has been put for today is the quantum CFO, right? Crafting growth and value. I really like the word quantum CFO. As CFOs, we of course manage the finance function, but like Mr. Bhaskar also said, the role has become an unlimited CFO. It is not a limited CFO anymore. Sometime back, I was reading the CEO of a very large international bank saying that the way I would like to see my organization, or the way I would like to see the future of my organization, is the organization being defined as a technological company providing banking services, not a banking company which is heavily relying on tech. And that says a lot, right? I mean, for example, the organization which I belong from, ID Fresh Foods, we also say that we are a technology company managing fresh food deliveries. Having said that, I feel a lot of the technology depends on how we adapt. And that is the role which we will, of course, hear from all the other panelists as well. I think adaptation plays a very important role in the whole technological or the digital adaptation or the move to technology-led organizations. For example, let me take the example of UPI. I mean, we all agree that UPI has been a roaring success. As much as technology has played a role in getting UPI up and running, making it accessible to all of us, I feel that adaptation by that, chai wal opposite this road, or the flower shop, or the vegetable shop, or the small hawkers, if they wouldn't have adapted UPI as much as we all wanted it to become successful, this wouldn't have, of course, happened. I was also, I think a month ago or so, I was reading a report from an American HR company called Indeed. I'm sure many of you would have heard of Indeed. It says that in that very interesting report, if you all can lay your hands on, I found two very interesting facts in that. Of course, there were a lot of countries which are covered, including all the developed nations. At least the names I can remember were Germany, France, of course the US, because it was a US-based company, UK, and India was also there. What I found interesting in the report is India was among the top in terms of willingness to adapt or readiness to adapt or the focus to adapt technology as a driver for all that it does. And then UPI is a classic example. We were almost the first in the world. It also said that 95% of the respondents for that, for the questionnaire or for the survey which they were doing for that report, from India said that we believe technology is going to change in the way we work and have a very positive effect on our work lives, at least, if not work and personal both. So with all of that, we think that the topic is very ripe today. Quantum CFO, automation, digitization, and AI is what this panel, as four of us, we will give our thoughts on today. To start with, I would like each of the panel members to, give a very opening thought or how they feel about this subject of automation, digitization, and AI in terms of making the CFO a quantum CFO. Sidharth, would you like to go first, please?
Thank you, Jaipal. Good morning, everyone. A topic which obviously most of us talk about it these days as a regular feature. There is a perception that, technology, machine learning, Gen AI, all these words will automatically solve for compliances and solve for regulatory stuff that any organization needs to do, whether it's in pharma, airlines, hospitals, any industry, financial services. Um, to begin with, I'll just give you a couple of data points. I think it was in March of 2024. US Department of Justice came out and said they're going to do some investigations on Apple as an organization for anti-competitive behaviors. In one day, the company lost $110 billion in terms of market cap. Another example close to home is Paytm. We all know what happened with Paytm in terms of not adhering to what the regulatory stuff was, even though they like to call themselves as a tech first, as Jaipal said, tech first organization doing financial services, right? The operations were halted. Brands lost credibility. They lost a significant value. They lost a significant market share. Somebody else gained. PhonePe gained a big market share because Paytm couldn't do what they were supposed to do. So some of these examples suggest that while we all understand technology will drive a lot of operational efficiency, productivity, compliances, regulatory standards, transparency to financial reporting, regulatory reporting, all of that, there has to be enough. I don't think there is enough dialogue and discussion today which talks about how do you integrate all these things from a running a fair and ethical business in today's world, right? There is no definition today of what is fair, what is ethical. We all use Amazon, we all use Flipkart, we all use, and there is a constant thing we talk about, are these Google reviews hacked? Are these Amazon reviews hacked, right? Can I, as a consumer, trust these reviews to take an appropriate decision? Well, guess what? There are no regulations today which actually put that onus on the seller to be compliant. But I think you would have seen yesterday that there are new regulations coming in India where you have to do self-declarations about your advertisings and brandings. It is a first step, right? And I think in this forum, with all my panelists and you, I would like to explore this dimension as well, which is how do you adopt technology in driving compliance and governance and awareness in the organization to build a fair, ethical, transparent business. Thank you.
Thanks, Sidharth. Very, very interesting takeaways. At least the Apple, Paytm, of course, we all know, but what Sidharth mentioned were about Apple, I wasn't aware, and that's the learning I'll take from you. I think he touched upon two more very important points. One of those reviews being hacked or not. I was, a friend of mine was buying some anti-insect repellent for his car. And the first thing he mentioned, he said, this is available on Amazon. There are about X number of reviews, assuming even 50% are fake or bought, which is what Sidharth just mentioned. But at least the balance 50% are good enough for me to go ahead, and I'm going ahead. Yeah, that was very interesting. With that in motion, may I request Sriram from Collins to give us a perspective of his thought on this, please. Hi, Sriram.
Thanks. Morning, can you hear me?
Yes.
Hey, thank you so much firstly for having me on this forum. I think these are the forums, that helps catalyze some of these discussions. We do learn a lot as panel members as well, speaking to a wide plethora of people just in diverse industries, right? So let's first deconstruct the subject matter, right? Driving compliant growth. Forget the digitization AI bit, right? So in terms of the growth per se, we all know, India fastest growing economy, this is India's decade, blah, 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 I don't need to get into that. We all know the opportunity and potential that this market offers for us, right? Now, in terms of the compliant bit, right? Let's and I'll throw some statistics out here, right? There is a study that came out recently that said that we have about 1,500 plus acts, that laws that are there in India. Businesses have to have about approximately 70,000 compliances, 6,500 compliance filings, right? Now, I mean, that's the worst, that's the extreme case where you're present probably in every state, every law is applicable for you, there are central, state, legislations that you need to sort of comply with, right? But on an average, pretty much most businesses have to comply with a lot of compliances, right? And then you see in the current paradigm, you see regulators becoming a lot more stringent, pretty much nationalistic. So you look at the data privacy, the Data Protection Act, which where you have compliance penalties ranging up to 250 crores, right? That can typically wipe your revenue of most companies, right? So you're in that sort of paradigm where regulators are becoming nationalistic, they're becoming more aggressive, and I can tell you in India, more than the businesses, I can tell this from my own experience, the regulators probably have a better digital profile about your own business than you yourself have, because there is GST, tax, enforcement directorate, all of that is they have probably have a better digital mapping of your business, right? In that paradigm, so this is the paradigm that we live, right? Cost of compliance going higher, like he pointed out, reputation risk going higher, right? You have banks, fintechs, recent examples, which is where RBI sort of come down very heavily on some of the established institutions as well, right? I don't think you have an option in that sense from a digitization AI standpoint, right? Because you are in a phase where we are almost in a, this is an era of regulatory cholesterol, like I call it, right? Where, every regulator wants to have his pound of flesh, and the only way you can get out of, making sure that you don't hit a landmine is digitization AI, just simply because it's more cost effective, scalable, right? So as your business grows, you grow, it's more scalable, and also effective, right? Accuracy and all of that, right? Put in. Apart from all of your ESG goals, paperless, digital trail, all of that is obviously a consequential impact. But the primary sort of benefits, are these three, right? Which a business is looking for. So in this era, I would say that that's really, when you're looking at compliance and growth, digitization and AI obviously play, a key role to achieve success from a compliance standpoint.
Thanks, Sriram. Regulatory cholesterol is the word I loved. And I agree with Sriram, right? I mean, today the regulators maybe know more about our business or even our individual incomes. For example, today when all of us file our income tax returns, I think the, what is it called? AIS or AIS, yeah, it has almost everything. In fact, when I was filing mine, last week, it showed that I had received some dividend, which actually I had not even, I mean, the large dividends, of course, we remember, but there was some 2,000-3,000 or some very small amount of dividend which I had received on actually April 1st. So it was just, transitional between last FY and this FY. And it says, no, you have to pay tax on that. So that was the regulatory cholesterol, and completely agree with Sriram on they be knowing more about our businesses, our personal finances than us, which is good and bad both. I don't know, maybe we would love to hear from all of you. What do you think? Having said that, not a day in our functions, particularly in the CFO's offices, go without touching the word regulator, regulatory, regulation. So I think that's something we need to live with. Hari, of course, has been managing finance for a very large multinational for almost 2 decades now. So your experience, Hari, is absolutely invaluable to me, as well as I'm sure to all of the audience sitting here. Would love to hear your thoughts on this.
Thank you. You would hear me well? Morning?
Yes, Hari.
Okay. I think Siddharth, Sriram and Jaipal have covered it very well, so I'll keep it brief. When I think about this whole digitalization, which is the most abused word last few years, AI is catching up with that. Huh? That's going to become the next most abused word after digitalization. I go back to my chartered accountancy days way back. Huh? There used to be a subject called FEDP. I don't know, finance, enterprise, data processing. God knows what it was. We just had to finish that to get marks and clear it. Yeah, that was my only touch with technology when we studied at that point of time. Yeah, of course now people dive straight long into technology in your first day at work and in your content and in your subjects and studies. But we all grew up with technology. Yeah, whether it was Microsoft, whether it was ERP packages and stuff like that. Yeah, and today you can't imagine a world without a technology. Yeah, even I use the word digitalization and technology quite often. Yeah, and as they say, with great powers come great responsibility. With great technology comes also huge risks. Yeah, whether it is compliance risk, whether it is corporate hacking, yeah, corporate phishing. I've heard stories about how hackers have disguised themselves as big vendors. Yeah, they've created an email ID which is the same as a vendor email ID. Sent an email to a shared services center somewhere sitting in KL or Manila, asking them to change the bank account numbers. Yeah, giving them their phone numbers. I mean, they are so advanced today. Yeah, so as finance people and as finance heads and custodian of controls and funds, we need to be extra vigilant. Yeah, while we talk about massive digitalization and technology, we should also be aware of what are the downsides of it and put enough controls around it. Yeah, which we'll keep talking about the rest of the session as well. But be aware that that with the great benefits of digitalization and AI, also comes a huge responsibility for us as finance professionals to safeguard the company's funds, to strengthen the controls, and make sure that everybody in the organization is literate in terms of at least basic literacy in terms of technology and digitalization as well. Yeah, thanks.
Thanks, Hari. I mean, yes, what Hari mentions are going back to basics and remembering that at least all of us and all are larger than, we all lead large teams. I'm sure all the members sitting here lead large teams. So, cannot underemphasize on Hari's point of having the basic literacy done about the pros and cons of all of it, right? When I spoke, when I sort of inaugurated this session, I spoke about the need for adaptation. As much as there are solutions available, but the need for adaptation therefore becomes very critical and very important. At least in my personal experience, what I have found is the more we adapt tools which help us do the day-to-day functions, the more we are able to focus on value-added things, including, for example, innovation, right? Is a very new word in finance. We don't have to really innovate in finance, but in business, innovations are today led by finance. Those innovations become possible when we are able to focus on the non-day-to-day, non-accounting, AR, AP, non-balance sheet, non-TB roles. And to do those, I have at least personally felt automation, digitization, AI, we may call it by any name, but the tools which we have used for have helped us. I mean, I would request each of the panel members to share their experience on how adopting those tools, and then maybe if you like, you can give some examples of how adopting those tools need not be necessarily which tool or how and which, but how did adaptation of the tool help you in doing your job easily, and maybe will serve as a guide to all the audience here to understand 2 points. One is the adaptation and second is the importance of the tool. Sidhartha, would you like to go first, please?
Sure. I think there is no debate or dispute in anybody's mind that adopting a lot of these tools which are available today across the life cycle of a customer or across the life cycle of a business. Each of these tools have a significant role to play, whether it's a tool with regard to doing automated KYC for your customers, whether it is about signing legal contracts, whether it's about ERP system that you need to install in a business. Across the life cycle, I think in my experience, we have implemented a lot of systems, and each one of them have driven more operational efficiency, transparency, real-time access to data, and beneficial to the organization. It also actually helps in helping the compliance go up. The challenge is a lot of time for the finance leaders. It is very hard to explain other people in the businesses the real benefits of adopting a better technology in an organization. Let's say you're using a tally in your system in your organization, right? So you might be doing 7 out of the 10 steps, right? And you may today get away with doing 7 out of the 10 steps, and it's great. Now, when you implement Oracle or a SAP, you're bound to do all the 10 steps, right? It will not allow you that personalization or customization to say, look, you can skip mandatory steps. Now, somebody sitting in the business will think, oh, I have implemented Oracle, your finance team should be cut by 50% because now I have automation in play. The reality is that it may not necessarily lead to a reduction in the manpower, but it leads to a better compliant outcome from business perspective, right? And unfortunately, a lot of these things are not necessarily quantified, right? Because the cost of non-compliance is not something you know on a real-time basis, most cases, right? It will only come and haunt you 3 years later, 4 years later, when a GST guy will come for an audit or inspection, or an income tax guy, or anybody for that matter comes, right? It is 5 years later. And then a dollar that you had to pay has now suddenly become $5 that you need to pay. And suddenly it wipes out a business, right? I was recently reading that a cryptocurrency exchange in the US, I will not name the company, they were fined $4.6 billion for being non-compliant because they were not adhering to anti-money laundering regulations or sanctions, right? $4.6 billion. You can wipe out organizations with regard to that. There was another Danish financial institution, this happened about 9 months back. They were fined $2 billion for allowing for money flow in restricted countries, right? I think recently RBI for the first time actually put a hefty, in India even a crore is like a hefty fine that RBI imposes on a company for being non-compliant. And I think our job is to educate businesses with regard to saying what is the cost of compliance. वो बाद में देख लेंगे, बाद में solve कर लेंगे is not necessarily the way to kind of go about it. The other thing that I would request everyone is the definition of compliance itself has to change, right? We think about compliance in terms of a law, right? Oh, there is an income tax law, there is a GST law, there is a labor law. That's not necessarily compliance or just the compliance, right? Compliance happens across the life cycle of a customer. Compliance happens with regard to your contracts you sign with the customers or a contract you sign with the suppliers. Compliance happens with respect to your ethical business policies. Compliance happens with respect to industry norms which have been established. Compliance happens with respect to values that have been established for an organization, right? So all those values, principles that we speak about, right, which are kind of there out there on the board, how do you live those values is also a compliance, right? So I think our job is to make sure we get the benefit of these digitizations, but at the same point of time, run it in such a fashion that it translates into a competitive edge in the business. It can certainly be a competitive edge if it is implemented in a thoughtful manner.
4.6 billion, 2 billion, those were billions with B, just so the takeaway for me from Siddharth's point is that all of those could have been avoided, A, with a, good automated tool, B, Siddharth focused on implementation of the tool. The tool is as good as its implementation, and C, of course, is the adaptation of the tool. I'll give you another example of how it has helped again me and our organization in some of the tools. For example, our FP&A team, we used to have X number of members. They used to prepare the MIS schedules. All of you, of course, know what we in finance do as part of the financials, MIS, trial balance. But from there to today, if you look at our FP&A team, nobody makes the MIS. The MIS comes on first of the month on its own. The team therefore has to now focus on, okay, what next? Because when they were making MIS, they were spending, 1, 2, 3, as much as sometimes even 7 days in preparing various cuts. Because all of us like to see all our financial reports under various segments, like some of us may have geographical cuts, regional cuts, category cuts, channel cuts. So to make all of that, it would take 3, 4 days, and a lot of effort would be lost. Where a great tool helped us is automating it completely. Now there, and then the other thing, there when we make, naturally Excel is, I think, very prone to mistake. My experience is any Excel sheet which has more than, let's say, 5, 10,000 rows, there is a very high chance that there is some error in that sheet this time, or when you make it next time, next month, next quarter, next year, that also gets eliminated. So today in our FP&A team, nobody, absolutely nobody spends even a minute in making the MIS. It all starts with okay, MIS is there. It is there on first of the month. So what? And now what of that? And that keeps the team motivated. And that is what an auto MIS tool has helped me. I would love to hear from, Sriram now and Hari maybe a little later of how any of these tools have helped them.
So I think in Bangalore, I think one of the things that we are blessed with is a very good SaaS ecosystem, right? We are an global capability center, so that gives us a very nice sort of from a talent standpoint, talent pool standpoint. It helps us, you're closer to people who build a product, right? Uh, you know, a lot of us I know are work for Fortune 500 organizations, decisions globally driven. There is, from a local standpoint, a lot lesser say, right? But that's where I feel if you can leverage some of the internal, people who sort of, internal employees who sort of work within the GCCs to build tools, because they know one, things like cybersecurity, privacy policies, everything else that sort of comes in, right? And they can sort of help build a tool, customize it for you. Then you're not externally dependent also on SaaS. So I think you'll have to use a combination of both SaaS, the SaaS providers, and where needed, your internal employees to sort of figure out digitized tools for enabling your finance function, right? And in terms of I'll give you a quick example, anecdotes that I've had, and one of it is one of them are sponsors here, not that they've asked me to sort of talk about it, but in my previous sort of organization, we automated the entire accounts payable process, right? So what did that mean? People, our third party vendors could just upload invoices. So you would have purchase orders raised. A lot of it was automated from a DOA standpoint. And then once the invoices would come in, the vendors would directly upload, and we were forced to do it. Okay, it was a top-down, forced to do it. I can tell you, the local finance teams, country finance teams would hate it, right? Because they were like, hey, SEC requirement hai, ye requirement hai, and they were like, hey, whatever other requirements you have, we will, you can ask them to upload another invoice that is compliant, but all of the invoices will happen through the tool, right? And then you had a process where it was, there was, automatic goods, GRIR would happen, and then, it would directly flow into, into the ERP system. And, just from an efficiency standpoint, right? I mean, eventually we achieved like a 75%, just a 75% success rate. It was not like we achieved 100%, right? But our entire accounts payable team was like 5 people for all of Asia Pacific, right? And this is all of Asia Pacific, right? So, from an efficiency standpoint, I think what you need to sort of also determine is what is core, what is non-core, right? And all of the non-core work is what you'll sort of, help sort of digitize, eliminate manual sort of interventions. think as we move along in, the next few years, I think finance teams will have to now look at go beyond the numbers storytelling, right? What's really the story behind the numbers? Numbers to sabko pata hai, right? EBITDA ye hai, revenue ye hai, but what exactly is the story, right? And then, I think the finance teams will have to invest a lot more time into predictive analysis than saying backward looking, saying itna, this is my margin, this is my forecast. It'll have to actually go beyond that, right? And that's what business teams are really looking out for, right? Aside that, some of the other regular processes, things like tax, GST, income tax, a lot of this, I mean, there are enough use cases to sort of go back and say, hey, we'll automate it. The cost, again, like I said, the cost of non-compliance, refunds getting stuck, all of that sort of significantly goes down with all of the digitized tools that you have. I think the one challenge that each of us will also have to remember is once you start digitizing, you will have various digital assets in your organizations, right? And a lot of it gets built in silos. Gets built for a particular sort of objective, and it's sort of in a sense comes with a perspective of that particular team that has gone about implementing it, right? How do you then interconnect this, right? That becomes another key, right? Because you will have 5 different things giving 10 different data points and 15 different interpretations, right? That's what I think you will have to, once you have a bunch of digital assets, apps that you can sort of go back and use, that's the other challenge that comes about, which you will have to sort of go back and integrate some of this, because it would have been created at various points of time.
Yeah, yeah. I mean, so the next concept apart from great tool adaptation, implementation is now what Sriram has brought interesting is integration. There will be so many tools. We will end up with so many digital assets, as you mentioned, that integration becomes the key. Each of the tool has to speak to each other. Each of the tool has to give the same output, because if we fail in that, I think the whole process is failed. And we, all of us as head of finances, as CFOs, I think are best placed in the organization to ensure that the integration is seamless. The data output which is coming from each of the systems is seamless. I'll before handing over to Hari, I'll just give another quick example which helped us. Unlike any other FMCG, we do not have a distributor, super distributor, sub distributor, nothing. We straight away do from factory to the retailers. And in India, we sell. I'm talking only about India. We are present across 7-8 countries globally. But if I take the example of only of India, because that is more relevant in this room, we do at least about 25 to 30,000 invoices in a day, because we reach out to 25-30,000 retailers directly and sell it to them directly. Even if each invoice has 3 to 4 line items, that is 100,000 line items in Excel sheet for 1 day's sales report. Just imagine, for 365 days, it doesn't come in an Excel sheet. So we used to earlier manage with 3-4 Excel sheets, etc., etc. And that is where again a tool helped us a lot. One last point from my side I want to highlight. Sometimes we as CFOs shy away from tools because we find them expensive. We think that, if we implement this, it'll cost me, I don't know, maybe $10,000 or 25 lakh rupees, etc., etc. Of course, it costs. And Sriram touched upon the subject of digital assets. We always are okay to invest in a factory. We are okay to invest in a vehicle, land, building, because those are all physical assets. We can do a FA verification at the end of the year. Nobody does a FA verification, and sometimes we shy away because of the cost. I have learned again, over the last 20 years of my career, that a good solution can be expensive. A bad one can cost a fortune. So my request to all of you here, because you guys will make decisions for your organizations, keep this in mind. Good solution will be expensive. A bad solution, can cost a fortune. With that, Hari, I would love to hear your thoughts on.
Thanks. Let me flip the answer a little bit. Yeah? I think all three spoke about excellent use of applications and digitalization. Let me talk about where we should not use this. Yeah, there is rampant and indiscriminate need for data analysis technology just because something is available. Yeah, And finance being the largest user and consumer of data, we generate endless of reports. Huh? So let me give you an example. Let's take a simple business planning exercise. Yeah? We started with business planning, okay? Then came quarterly LE, monthly LE. Now they started mid-month LE. 15th of the month we give another LE. And then there is actuals. Yeah? And before we get out of all these things, at the end of the month, the business comes back, hey guys, can you please give me a report comparing business plan versus quarterly LE versus monthly LE versus mid-month LE versus actuals. I said, Dave, what are you going to do with all this data? Yeah, even I don't understand this many numbers in this report. Yeah, and before we could even recover from the shop, by the way, convert the plan into actual rate, actual into plan rate, and give me a comparison. I said, this is purely internal looking data, as Sriram was saying. Yeah, uh, and story doesn't end there. Our finance folks are champs. Yeah, they look at this data strewn all over. They want to consolidate it, massage the data, create pivot table, complex macros. Yeah, and then give a report. And the guy comes, my person comes and says, we've done it. I said, what have you done it? You've created a fantastic report, whatever the business wants. Yeah, it breaks my heart to tell him why. Yeah, I mean, the guy has done a great job. Yeah, he's happy. He's so proud of his achievement. As if he's crossed sailboat to Hebel in 15 minutes time. Yeah, it's a true testament of capacity. But why would you want to do such internal looking data and spend hours and hours doing that? Yeah, rather we go back to the business and say, hey, listen, I have limited resources. I have limited technology. I might as well use my people to go out and mine data from the external market, do a nice competitor insight. Yeah, I can look at I can make them attend the investor meetings of my listed companies competition. Yeah, I can give you a product mix. I can give you why their unit margins are lower or higher. How much are they spending on marketing compared to us? So would you rather want this kind of data, or do you want this whole LE, mid-month LE, this LE, that LE was actuals? Yeah. So as finance people, we need to channelize the technology and the people in the right way. Yeah. To give the right kind of impetus and data to the businesses that helps us decide the actual business growth, rather than, as Sriram rightly said, inward and fast-looking data. Yeah. To a certain extent, it's relevant. Yeah. But that's where I think we as key people perform this role to channelize the digitalization and the data correctly to help the business. Business wants so much. They want to make fancy presentations. More the data, happy they are. Yeah? But it's up to us to put a guardrail to say, sorry, I'm not going to give you all this endless amount of data. I'd rather give you this much. Yeah? So that's one perspective I just wanted to give to say right use of technology, data, and digitalization is very, very important as well.
Very interesting. Business plan versus AOP versus quarterly LE versus monthly LE versus mid-month LE versus actuals. And the best part, just to add to what Harish said, the data which is being asked for from the person who is asking for this data is the one who gave the business plan and the quarterly LE and the monthly LE and the mid-month LE, and then now is asking for a variance between all of those. Yeah, very, very interesting. So that brings me to the next point of, and then like Hari mentioned that, should we be doing that? And Sriram also touched upon, Sidhartha touched upon the internal looking data, or should we really be looking at what else we should do? And therefore, what becomes very important is talent management within our teams. Are we all geared up, starting from us to, our L-1s and the, senior general managers who all sort of loop or report into us, and then they have their own teams. All of us manage large teams. So talent management becomes so critical. I would like to hear from, all of you is, are we doing the right things in terms of talent management within ourselves, starting with ourselves to the last of our team members, to ensure that the whole team is geared up for living up to the expectation of this quantum CFO, the digitized CFO, adding value, crafting growth, all of that. Because one thing I very strongly believe is, it's not the skill, it's the will. Yeah, it's not the skill, it's the will. On that, I would like to, hear thoughts from Sidharth. Maybe Sidharth, we can start with you.
So, no, it's a great point, Jaipal. And to begin with, there is a good news and there is a bad news. The good news is, if you go back to, maybe 1970s, about 50 years back, You get down on a railway station or you get down on a bus station. There used to be a Kisok which used to talk about you go there and say, I need to go this, which are nice places to see, right? And then there was a boom of internet, and everybody thought all this industry is going to go, people will have no jobs, etc. Fast forward 50 years, right? People are traveling more. There are more travel companies. There is more travel information available now than it has ever been available in the world, right? So clearly, when there is digitization, when there is more easy access to information, that obviously opens up more opportunities and avenues for people, right? And that is the same thing for finance professionals going forward, that there will be more avenues for finance professionals. The key thing, as Jaipal said, is do you have the right skills to tap on such opportunities? Or are you still looking at opportunities in a more traditional and conventional manner, right? So let me give a very random example here. Let's say in the world somehow we all come to a consensus that any legal decision in the court of law will not be taken by a judge, but it's going to be taken by Gen AI, right? Now, so there is an offender in the court, right? And the Gen AI says this person is guilty, okay? Now there is a judge, right? He obviously has more human judgment and a lot of other aspects associated with it. Should he override what the Gen AI is saying, or should he not override what Gen AI is saying? How many people think he should override? All right, a few. And how many think he should not? Few, right? Now imagine he overrides, right, and he says not guilty. And this guy goes out and commits another crime, right? Now, Gen AI, right? People are going to ask you question that why did you override this decision, right? So by virtue of that, there is going to be more accountability driven on decision making process. Now apply this concept into your world of finance and regulations and all of that, right? And you have built all these complicated algorithms by the tech guys, etc., right? Which nobody understands, right? As to what that is happening. Now a regulator comes or a statutory auditor comes and he says, explain me your decision-making process. Can you simulate this decision-making process? Right? Can you provide empirical data to prove this is right or wrong? Right? Is that requirement going to go away? No. It is only going to increase. As what Sriram said, the regulatory stuff, Sriram, what was the word you used? Cholesterol, right? So that means you will need more people in finance, in legal, in compliance to be able to help the regulators, the customers, the investors about the decision-making process of an organization. It isn't going to be easy. It's going to be actually very difficult. Who is going to untie the knots of that program which it's learning by itself? Who is going to do that simulation? It's a very tough one. So that's a good news, right? There's going to be more for the finance folks, compliance folks to do. At the same time, I think it's time to look at being more tech savvy, learn computational languages. I think Jaipal used the word quantum to begin with, right? I think that's where the skill sets have to be enhanced to give you that competitive edge in the marketplace. When the next finance leader is being hired, you have those skills to decode the myth for the regulators, right? So,
Interesting. Sriram, would you like to add?
Yeah, no, I echo his sentiments, right? The fears of job losses are real, right? Let's not kid ourselves. Having said that, like he said, the good news, when digitization happened in the banks 30 years back, core banking solution, what happened? Bank unions protested. Eventually we've got a larger economy, more jobs. Everybody is sort of, without a computer or a core banking system now, nothing in banking can work, right? So I think that brings me to the point of, in your respective finance teams, what do you guys do, right? I think you guys need to lay the top-down vision, right? Saying, hey, this is the end state that you guys need to sort of, this is the outcome that we are sort of going to go forward, irrespective, right? And to that end, I think you need to identify change agents within your team, folks who can go back, 5 years. One, finance is a function where people have limited bandwidth. Month close, quarter close, audit, tax, the full year is gone, right? So people who are motivated to do more work beyond go over and beyond, and sort of empower them, right? So that 5 years down the line they look at it and say, hey, I did make a difference, right? I think there has to be that element where people get a sense of ownership, and they almost think that, hey, we've made a difference to the organization, right? So empowerment, stakeholder management, and you guys should be laying down the top down vision, and the people, your L minus one, the people who are in your respective team should actually determine the course of action, right? In terms of how do we go about doing it, right? That's when you create a top down vision and a bottoms up sort of ownership that's there. So once you get both of that integrated, that's when you get the best solutions overall. So that's where sort of I'm at. And then obviously reskilling, upskilling your team. I think we'll have to transition ourselves mentally from being like a cost center to a profit center driven mindset, right? And that's where I think AI really sort of gives you the kicker in that sense.
Yeah, thanks, Sriram. And Sriram mentioned about banks digitization. I'd also like to just add to that. When the IRCTC, the today's IRCTC was just called the Railways ticketing booking system those days. When it was getting digitized, there was a strike. Railways went on strike for a couple of days, saying that no, we should not, all of that and everything. And today IRCTC is here to see. I don't know if we ever went to that. I don't even know where the booking office is today. And that's the shift which has happened from a strike that don't do this to today. I mean, and all of those employees have better work. When the industrial revolution happened also, there was a lot of hesitation that jobs will go, etc., etc. But when we saw machines coming and doing those jobs, we have seen, over the last 50 years, industrial revolution happened 50 years ago, we have seen that those people actually started developing more and more innovative, newer concepts. I mean, I'm saying, yeah, it's a destruction, but atom bomb would not have got developed if the guys who developed the bomb were really mining those metals and minerals. Because a machine started doing that, they started focusing on what else could be done. With that, yeah. Hari, your quick views, and then we maybe open up for Q&A.
Let me just take a quick 1 minute to probably talk about the trends that I'm seeing currently, in large organizations at least. What's actually happening is the finance function has decided the right way to go is shared services and GCC. So they're moving away the main finance function into the shared services, and packing, and rightly so, with ruthless focus on efficiencies and digitalization. The business wakes up one fine day and says, hey, where are my finance guys? Finance says they're all there in a shared services center. Business says, I want them next to me. I'm sorry, that's not the strategy for finance. So the business now starts recruiting finance people in various designations: commercial manager, pricing manager, business development manager. So finance people are slowly getting into the business function. What is happening in the finance world? Finance, a shared service center is, as I said, ruthless focus on efficiency. They are frustrated with IT department. They're saying, where is the automation? IT is not helping me. I will go and recruit my own IT guys. So finance is recruiting IT. Business is recruiting finance. And IT, on the other hand, doesn't want to be left out. They're saying, hey, I'm all technologically savvy. What I'm missing is the business focus. So they go and recruit from the business. So the walls are thinning, the walls are breaking. We can no longer say, I'm a chartered accountant, I'm a CIMA, I'm an MBA finance, I want a finance role. No, we need to be multiple skilled in technology or in commercial acumen. For us, then the end goal is the horizon. There's nothing stopping us. And what we do specifically is we create this group of people called purple people, yeah, where we get good finance people who are very interested in technology and start training them. Yeah, we democratize technology. We say that okay, certain things can be done by the business. Don't go to IT. You want to use an Alteryx, you want to use middleware, develop your own technical solutions. Don't even involve IT. That way, a finance person starts getting exposure into actual technology tools, yeah. And we identify key people who are tech savvy and groom and train them in basic technology. We call them purple people, yeah. They're a mix of finance, commercial, and technology. And I think that's the way it's going to happen. Yeah, there is no longer going to be a specialized finance person who I know IFRS, I know accounting very well. Take me. Sorry, yeah. What else do you know about technology? What else can you contribute to the business for? So that's the way to go, and that's the way the organizations are moving. It's multi-skilled personalities everywhere, not only in finance. The key for us is to develop ourselves and groom our teams as well, yeah, into these multiple skills way beyond finance as well. Thanks.
Very interesting. Purple people. I must say that I will leave this podium a lot more learned than what I was when I joined here. I'm sure same for all of you. With that, Varsha, should we open up for Q&A? Maybe we have got just last 5 minutes, so.
Yeah, I'm actually very excited. So I'm ready for the question. I was waiting for all of you to kind of wrap up the conversation. And Hari, some of the things you spoke around shared service. So just a quick introduction. My name is Hari Swami. I'm from Excella Technologies. We help all the CFOs to take their finance and accounting processes. So we either help them setting up a shared service in their location, or we move it to our location. And we have a bundled offering where we go and consult, study the process, and then kind of take it to whichever location they want, model they want. So one of the things I really wanted to ask all of you as experts in your experience, what I have seen is there is a lot of focus by CFOs to drive efficiencies. They want to move the digital assets as well. And they say that even for controls, I have assets. But when the question is asked, how is that you are driving controls, whether it is SOX, whether it is segregation of duties, we have seen the answer coming that digital assets are going to take care. That's one. Number two, all these digital assets are also vulnerable. So if the AI get hacked, then your entire control goes for a loss. And we had cases with some of the clients where they compromised on their due diligence. And when we took and we had put that into a shared service, the whole model was different. And there were control gaps. So with your experience, have you seen this happening when you kind of move from a manual control model into a shared service model? You have some AIs, but they are vulnerable to getting hacked or getting corrupted. And if that happens, obviously there will be a compromise on compliances. So this is a very new trend we have been seeing in the market. We are coming with a lot of solutions, but I would be very keen to hear from each one of you or one of you.
Sure. No, very interesting question, and I'll quickly give a 10-second perspective. See, as part of CFOs, we do, apart from finance, accounts, legal, strategy, taxation, audits, a large part of our role goes into risk management. And the way I see it, risk, at least my definition of risk is what we don't see. I repeat, risk is what we don't see. As soon as we see something, then we know it is a risk, we know the impact, we are prepared for it. For example, COVID, right? I mean, if we would have all known that there is a virus like that today, and today that we are all, aware of it, I think we would have been prepared to fight for it. Whereas, because we didn't know, we were caught unaware, and then, we were grappling of how to develop a vaccine, what else to do, what not to do. To answer your question, sir, therefore, if we, and then the risk which you said is a real risk, the good part of it is an identified risk. We have understood that once we move, if any of the control fails, ABC can happen. And at least in my version, because we have identified the risk, we know the answer. Yes, when it triggers, there will be an impact. We are prepared for the impact. What we don't know is a real risk, and that is what we all should focus on. That what is the risk which we don't know? I mean, any of you want to add?
I think Hari, very relevant point. I have seen this multiple times. Um, one, there was recently in our organization, our marketing guys kind of did some changes to the algorithms for organic traffic, inorganic traffic. It was meant to, alter some stuff on the inorganic side. It actually also changed something on the organic side. As a result of which there was, a significant slide in terms of your lead generation, etc. Similarly, in one of our HRMS systems that we had implemented, we wanted to make some changes to make it more employee friendly in terms of some of the features, right? Now, we did that, right? But we screwed up on something else in the system, right? And that brought me to a very interesting point that when you are talking about these automation, standardized processes, right? Lot of us don't, right? Not by choice, but just by compulsion, don't understand the cause and effect relationships in systems, right? And and it is very, very difficult, even for the teams, because they don't understand what's the algorithm, what is the code behind it. Neither the guy who's sitting on the other side understands the cause and effect relationship, and as a result of which, it can lead to a lot of downside and damages, right? It happens, I would say, all the time. Now, there is therefore a fear that sets in, let's not touch it, because I don't know what else is going to kind of screw up. And that's a real challenge I think we all are grappling with. I wouldn't say that we are not. We all are grappling with those challenges. How do you make your teams more knowledgeable, more trained? Because somewhere our employees or team members now have a mindset to say, technology will take care of it. I don't have to apply my brain. I don't have to apply the logic. Technology will take care. But guess what? The moment you need a change, the weakest link in a process is the people, right? And I don't know how to solve that. It's just through continuous learning and, as teams said, upgradation, etc. But it's a real challenge. So your observations are spot on.
And therefore, risk identification, I think, is the key. Like, for example, stress test. If you see some of these weekends, we are now BSc, NSE are open and market. That's all just to do, mitigate the risk which you just identified. That are we stress testing? And I think those stress tests went well, is what I hear for BSc and NSE over the weekends. We'll take one more question if there is any, and just in the interest of time. Or, yeah.
Hi everyone.
In the interest of time, we'll just take maybe one more
One last question, yeah.
My question is to Jaipal. I want to know how the 35,000 invoice.
Can you be a little louder?
Yeah, my question is to Jaipal. I want to know how the invoicing part is sorted. You are raised 35,000 per day. How you are sorted?
Sure. I think that actually is a very easy answer. I'll tell you what we have done. What we have done is we have created barcodes on all the packs. Now, all what we are doing is a salesman, when he goes to the store, he just has to scan those barcodes as to what he has kept there. Once the barcodes are scanned and the store is geo-fenced, the system automatically knows inside which store he is. Only when he is inside, he is able to open that, store, because he cannot come to Conrad and make an invoice for, let's say, Radisson. So once he goes inside the store, he opens up because it is geo-fenced, only then that gets active. He can see only maybe within that 15-meter zone, these 4 stores are active. So he can open one active store, just scan those invoices, and there is a price list linked to each store. For example, if it is a Reliance Fresh in MG Road, then there is a price list which is linked to Reliance Fresh MG Road for all the SKUs. He doesn't have to do any of it. As soon as he opens Reliance Fresh, scans 2 packets of batter, 1 packet of coffee, 1 packet of paratha, the price list triggers, it creates an auto invoice, it prints that invoice, and it comes back and posts into SAP.
Thank you.
With that,
Hi.
yeah. One last, okay.
So first of all, thanks a lot for the wonderful session. Everybody talking about the AI. Can you share some of the specific use cases in area of finance and compliances where AI can be used, or Any specific use cases where AI is being used in your respective organization? Thank you.
So, not specifically AI, but automation I sort of covered in terms of accounts payable, accounts receivable processes, tax automations that can happen. There is a lot of use cases even on supply chain, right? Some of it we use, some of it, some of it we use globally, right? Not in India because, our sort of supply chain is sort of non-standard to that extent, right? But yeah, like I said, I mean, from a financial forecasting standpoint, a lot of the RPAs, like he spoke about, right, getting all of the reports done from, pulling the data out of your ERP, the RPA works on it, and then, you get automated dashboard reports. The only thing that has to then go back is, you look at data visualization tools, whether it's Power BI, Tableau sort of a thing, and see whether, it all makes sort of sense. So, a lot of our internal processes are driven by that. I would say, I personally use it to a lesser extent in that. It's more digitization, automation. I would want to sort of, categorize this into two sort of parts.
But I can give an example where AI helps us. See, we manufacture a product. For example, I work for a company called ID Fresh Foods. We do batter, paratha, coffee, paneer curd, all of those. So, for example, the shelf life of batter is only 5 to 6 days. Our problem is if we manufacture and it doesn't sell, the product is waste. If we don't manufacture because it will go waste, then the sale revenue is gone. So that is where AI comes into picture. Every day there is a predictive system which works every day and keeps giving us continuous inputs. It's not an input for a day together. I mean, it gives continuous inputs throughout the day to all the plants. We have 5 plants in India, 1 in Dubai, 1 in Saudi. It keeps giving inputs to all the plants saying that this is where you are, please manufacture 1,000 more packets, please manufacture 2,000 more packets. Let me give you an example. For example, when the JP Nagar metro work started, AI started, interfering that, or not interfering is not the right word, intervening and saying that, look, I have been seeing that over the last 4 days in that particular store in JP Nagar, on the signal, the footfalls are lower. So you may want to therefore curtail down your production for those stores to that extent. And we did, and it helped. For example, there are school holidays, right? I mean, for example, there is a weather forecast. For example, there was a flood in some of the areas. All of that is where AI intervened and helped us. For example, there were, I don't know how many of you noticed that there were a lot of rains in Dubai last month and it really disrupted the whole transport ecosystem, etc. AI gave us that warning that, vehicles are not able to move from here to here. So your factory is here, your stores are there, demand is there, production is here, but how will you go? You will not be able to go, so please don't produce. That helped. For example, there are, last week there was Bakrid was there. So we got an input saying that Tuesday Bakrid is there, these pin codes, we think the stores will be closed, etc., etc. So yeah, just interest of time, but yeah. Thanks. Thanks. Varsha, over to you. I hope that answers the use case of AI.